Good evening and welcome back to Be Rich. I already discussed in this channel about the falling yen and that it is sending a signal. The yen had, of course, gone to 127 yen to a dollar, a 20-year low, which would have made Japan very competitive in its exports. I also told that since it's the third largest currency in the world, this cannot last because other markets will become uncompetitive and therefore you can expect emerging market currencies to fall more. This is my logic for the falling yen because America and Japan have divergent monetary needs. There seems to be no inflation in Japan, and therefore Japan does not need to tighten its policy. The central bank is still supporting the economy and pumping more money into it, and the Japanese people are not spending and saving more. In contrary to the American market, where there's record inflation of the likes they have not seen for 40 years. People are demanding more wages, something not there in Japan, and this is pushing up inflationary expectations. But this I had already told you before. And what is the new thing about this? Well, a surprising thing has happened last week is that the euro has begun a descent, and the euro dollar exchange is settled in favor of the dollar. The euro now has hit a 5-year low against the dollar. Why is this so? The European economy is definitely affected by the Russian Ukraine war because countries like France and Germany are dependent on Russia for energy needs. And of course, disruption in Russian and Ukrainian grain markets and sunflower markets have definitely affected the food prices in Europe. But what also is expected is that demand will contract in Europe and therefore there is no need for it to follow an aggressive monetary policy. But the American economy is largely insulated from the Ukraine Russian war. And since America is also self sufficient in crude, there are no big shocks to the American economy. So the American economy is firing on all cylinders and inflation continues to rise. This has pushed Jerome Powell to turn extremely hawkish. He has said a 0.5% interest rate hike is likely in May. If needed, he will follow with another 0.5% in June. This means if both these threats are true, then he will hit 1.25 by June. What should have taken 5 quarters has been compressed in 1 quarter. Also, there are reports that they will start to shrink the size of the treasury balance sheet from nearly $1 trillion in 2008. The US Treasury balance sheet or the Fed's balance sheet has expanded nearly 10 times to $9.6 trillion. Now, the Fed has said that they will allow the balance sheet to shrink for the first time in more than a decade. They will allow the bonds which they hold to expire on maturity. It is expected that the Fed balance sheet will decrease at the rate of $95 billion a month. It is expected that the Fed balance sheet will decrease to 8 trillion in 1 year. But in euro, there is no such risk of happening. While the eurozone may not increase its balance sheet, it is not talking of decreasing its balance sheet. While the eurozone may have some inflation, it is no level at the same level as the American inflation rate. Therefore, the expectation is that the Bundesbank and the ECB will be much slower in tightening their monetary policy than the Americans. This divergent policies means that US treasuries will definitely get a higher yield than the European ones. Already, the American yields fetch more. This means that more money will flow into America from Europe and Japan, and thus there will be demand for US Treasury. Therefore, the dollar is strengthening against both the euro and the yen. This is what I predicted. And if the yields continue to surge, the rally in gold is also over, as dollar will strengthen against gold even more. All this will mean that strengthening of the US dollar will mean lesser American exports and more imports into America. If the Eurozone and the Japanese continue to depreciate, the emerging markets cannot be far off. If all emerging markets currencies fall, India cannot be the only lonely country which has a strong currency. The rupee is today trading at 76 or 65, and one can expect that the rupee will depreciate to 80 within a year's time. If it does not, then Indian competitiveness in the world market will be affected and Indian exports will suffer. No government would like that to happen. Therefore, the RBI, which is selling dollars at this time and allowing the Indian reserves to fall, will have to reverse trend, turn hawkish, and not supply dollars in the market and allow the rupee to fall. If the rupee does not fall, exporters who are mainly small and medium scale will take a big hit. This is the logic for buying the IT index and the pharma index in India. Overall, the story is very clear, like the Reagan's Imperial Circle, described by George Soros in his book, The Alchemy of Finance. A stronger dollar is going to pull money from the periphery into the American economy. This will mean the weaker currency in Europe, Japan, and Asia, which will stimulate their exports and settle the balance in trade in their favor. America, which is already running a deficit, will continue to run a bigger deficit. While the euro and the Japanese yen are down, the offshore derivative markets for the yuan, the Chinese currency, it also shows that the yuan is trading at a 1 year low. Thus, because of the pressure to control inflation, America is unwittingly having to bear the consequences of a strong US dollar. Thank you for watching. Be rich. If you like this content, kindly subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. If you like the content, kindly consider sharing it with your friends and relatives. Once again, I thank you for your support to Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.